Greetings, children. Welcome to my channel, XII Accountancy by Shakun. Today we'll be talking about Chapter 2, Fundamentals of Partnership. The subtopics to be covered are Guarantee of Profit and an example based on it. I have already talked about Guarantee of Profit in my previous videos. Kindly refer to those videos for better clarity. Guarantee of profit is the assured sum of profit it is the assurance which has been given by a partner to a partner, or by the firm to the partner, or by a partner to the firm. Let's understand this with the help of an example. Ankur, Bhavna and Disha are partners in a firm. On 1st April 2019, the balances in their capital accounts stood at 14 lakh, 6 lakh and 4 lakh respectively. Now these capital accounts are given on 1st April, that means these are the opening capitals. They shared profits in the proportion of 7:3:2 respectively. Partners are entitled to interest on capital at 6% per annum. So interest on capital can be calculated at the opening balances which are given in the question. And salary to Bhavna is 50,000 per annum. Since it is per annum salary, so it will not be multiplied by 12. And a commission of 3,000 per month to Disha as per the provisions of the partnership deed. So since Disha's commission is per month, we'll multiply it by 12. Bhavna's share of profit, excluding interest on capital, is guaranteed at not less than 1,70,000. That means that when we do the calculations for the share of profit, Bhavna's only share of profit, we do not include interest on capital in that, only her share of profit is guaranteed at 1,70,000. On the other hand, Disha's share of profit, including interest on capital but excluding commission, is guaranteed at not less than 1,50,000 per annum. In case of Disha, that means that her share of profit plus the interest on capital total should not be less than 1,50,000. Any deficiency arising on that account shall be met by Ankur. The profit of the firm for the year ended 31st March 2020 amounted to 9,50,000. Please prepare profit and loss appropriation account for the year ended 31st March 2020. Let's look at the working notes. First, we have calculated the interest on capital at 6% on the opening balances that were given in the question. So Ankur's interest on capital is 84,000, for Bhavna 36,000, for Disha 24,000, and the total interest on capital is 1,46,000. Then calculation of salary and commission. Salary to Bhavna was given to you in the question, the per annum salary as 50,000. But in case of commission to Disha, it was per month. So therefore, we have multiplied 3,000 by 12, commission to Disha being 36,000. So the total interest on capital is 1,46,000, salary is 50,000 and commission is 36,000. Moving on. Now we need to calculate the profit which will be available for distribution. So from the net profit that was given in the question, 9,50,000, from this we subtract the total of interest on capital, the salary and the commission. So after we subtract IOC, salary and commission, we get the profit available for distribution, which is 7,20,000. The PSR in the question is 7:3:2. So this 7,20,000 is divided in 7:3:2 ratio, thereby leading to the share of profits. Now Ankur's share of profit 4,20,000, Bhavna 1,80,000 and Disha 1,20,000. Now the first guarantee. Bhavna's minimum guaranteed amount was 1,70,000 excluding interest on capital as was mentioned in the question. Okay, so excluding interest on capital means that we only look at her share of profit. Now her actual share of profit is 1,80,000. Now since the actual share of profit is greater than the guaranteed amount, so that means she is going to get the greater of the two, that is she will get the actual profit share of 1,80,000. Since the minimum guaranteed amount is lesser than the actual share of profit, therefore there will be no deficiency and she will be getting 1,80,000. So no guarantee as such applied here. Now let's talk about Disha. Disha's minimum guaranteed profit was 1,50,000 including IOC, interest on capital, but excluding salary. That means we have to compare this 1,50,000 to her share of profit in which interest on capital is added but salary is not added. So Disha's share of profit including IOC and excluding salary is equal to, see, salary is all obviously excluded only. We don't need to subtract it, but we will add interest on capital. So her total share of profit would be 1,44,000. Now, Disha's minimum guaranteed profit was 1,50,000, but her actual share of profit including IOC is 1,44,000, thereby leading to a deficiency of 6,000. Since her guaranteed amount is greater and her actual share of profit is lesser, so 6,000 will have to be given to Disha. Now, this deficiency, it was mentioned in the question, will be borne by Ankur alone. Therefore, this 6,000 will be added to Disha's share and it will be subtracted from Ankur's share of profit. Now Ankur's share of profit was 4,20,000 from which we subtract the 6,000 deficiency. Therefore his actual share of profit will be 4,14,000. The 6,000, the deficiency amount, will be added to Disha's profit. Now Disha's profit was 1,20,000, not 1,44,000. 1,44,000 was calculated only for the purpose of calculating the deficiency. Okay, so her actual share of profit was 1,20,000, in which we have to add the deficient amount of 6,000. Thereby her profit comes out to be 1,26,000. Let's have a look at the profit and loss appropriation account. On the credit side, we have mentioned the profit and loss that was given in the question, 9,50,000. Interest on capital and salary and commission. All these three things are appropriations, expenses for the firm, therefore mentioned on the debit side. The divisible profit is 7,20,000, but it has not been directly distributed. We have to write the distributable profits from the working note which we had prepared. So Ankur's share of profit was 4,14,000, from which the deficiency has been subtracted. For Bhavna, the profit remains the same because it was more than the guaranteed amount, and for Disha the profit was 1,20,000, in which we have added the deficient amount of 6,000. So I hope the concept was clear to you, the question was clear to you. There are other questions in your book relating to the same concept. Kindly solve, and in case of any queries, feel free to contact me on my email ID. I hope you liked my content. Please like my video, subscribe to my channel and hit the bell button. Thank you so much for your cooperation.